The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble but lovable host, David White. And again, we join you from the headquarters of Technical Trading and Investing. That is TFNN.com. We have pretty much what you should expect: a light volume push up into the 4th of July, not the 3-day weekend, but kind of the weekend. And it is very common, especially midsummer. You get a 4th of July on Thursday that we get a lot of people that are the kings of Wall Street to take off for the trading week or leave very early in the trading week. I figure that they left about noon today. And probably not going to see them back until Monday. Probably going to see a slow volume sell-off. I suspect we're going to close under 1,600 on the S&P cash either tomorrow or on Friday. It will be a light volume through then. I just saw something on TV that talked about one of the internet startups that's pretty big and known for their ride sharing for cars. But they've set up a deal for Wall Street. For $3,000, you can get a helicopter ride up to the Hamptons and avoid the 4.5-hour bumper-to-bumper traffic. Kind of interesting, but if you got the cash, I guess maybe your time is worth a lot more than what it takes to get up to your Hamptons home for the holidays. And, of course, you leave the B or C team in, and their one goal is to make sure that the market goes anywhere slowly. Slow it down. Do not get anything. Do not try to do anything exciting. Just dumb it down. We'll be back on Monday. Don't let anything get out of the way. We'll be back on Monday. One of the funny things I saw was somebody lost, some big hedge fund manager lost, hedge fund manager lost power, and they were literally trading up there in the Hamptons. They had 8 PCs, and they brought in, the only generators they could get were 2 giant cat generators. Of course, the cops, the neighbors, of course, everybody, you can imagine what the people are like up in the Hamptons. But, of course, his neighbors called the police on him and said that he was making a huge racket with these giant generators. Of course, he was had the air conditioning going full blast. But 8 trading either micros or workstations or whatever it was. And he had all the people from his office that normally traded at his Hamptons home. They basically had to get into it with the police. And called a lawyer, found out that, if you lose a power, you have every right to run a generator. And it didn't say anything about the size, but apparently these things were rather large Caterpillar diesel-sized generators. Anyway, it made quite a hullabaloo a few weeks ago. Well, it is overkill only if you couldn't buy another regular standard generator, which apparently all of them were already gone. So it's kind of interesting. Anyway, we've got a market out here. Let's take a look at the price and volume right now. 1288 on the S&P cash, just turning a little over 2 billion shares on the S&P. I figure we're going to probably end up with about 3.2, 3.5 billion shares on the day, and probably just going to see a low volume pullback. I suspect very light volatility on Friday. So figure that if we do 2.5 billion shares on Friday, I will be impressed. Let me put it that way. Again, what you're seeing here is probably a low volume pullback. Probably going to see this thing pull back underneath the 1600 level on the S&P cash. For the less trading inclined, they will probably be talking a lot more about the Dow Jones level, which is below 15,000. So they'll make a big deal about it closing below 15,000. But kind of interesting. Somebody was just saying something in my IM. The most interesting thing was that some hedge fund manager was actually twittering all this, or a next door neighbor was twittering all that thing about the backup power supplies in the Hamptons. But so you can probably go find it on the internet, the ultranet, whatever that thing. I think it's just a fad. The internet, it's going away. Anyway, IBM, kind of interesting news out there. We had, see if I can dig it up because I saved them here. Let's go look at it. Kind of interesting that IBM's doing everything it can to cut costs, and that means pretty much cutting employees. And see if I've got it here. Let me find it. Here it is. And I saved a lot of these things here. The Alliance at IBM, Communications Workers of America, it's their union. It's part of the AFL-CIO, but very quiet. IBM has not said anything, but since June 12th, over 3,000 U.S. and Canadian IBM employees were notified that they were no longer needed. And there's actually a list of all the different departments and what people have been and who was being fired. So we're seeing some of these, of course, IBM down on horrific volume, had a kind of a little bounce out of here. Certainly looks like this thing wants to come back down to a previous low level. What do I have here? 4 years. Let's go back to 6 months. There we go. This thing, it did test with the same volume, the previous low in the market. It still needed about $1 lower, 80 cents, something like that. But the volume was the same, which implies another test of the low before you're going to see any light volume. The question is, how will investors like their next earnings report when it comes out to find out that the only thing holding this stock up is continual share rebuying and continually axing more and more employees. Of course, about a year ago? It was actually a year, maybe a year and a half ago, because I remember it was right after Christmas. There was a document leak that basically showed how International Business Machine was going to continue, although with slowing products, was going to be able to keep their earnings per share up high, and it all had to do with a few things. Share buybacks, so there's less shares out there in the market, therefore commanding a slightly higher price. They could do that ad nauseum, trade their own stock to make sure it stayed high. But the other end of it was the elimination of, what was it, 125,000? Whatever it was, an astronomical number of people that they were planning to fire over the next couple of years. And that plan's been out there for a while. So now what, year and a half? I was met with some skepticism by other members of the TFNN staff because they knew IBM employees, but I don't think that they knew the CEO and her plans to basically gut the company to make sure the stock price stayed up for a long time. Now, Wall Street loves a few things, and that is a CEO that makes sure that the funds have plenty of time to sell their shares to the rubes or the latest dumb money coming along. And this is one of those stocks I suspect that one day is going to crater when we find out it's hollow from the inside. They continue to actually patent massive amounts of new ideas, but not a whole lot of new products, just a whole lot of firing employees, replacing them in India, if you can call it that. I've been through several routes of trying to send stuff over to India to be programmed. Basic websites, not such a big deal. Talking about inventive programming, a big deal. And, the thought is, we'll just, we can hire 5 people over in India for what one costs us here in the United States. But as my boss once told me, he said, when you're developing software or hardware. He says it's like getting a high jumper. You don't get 6 guys to jump 1 foot. You get 1 guy to jump 6 foot, or more likely 7 feet. And you pay him all the money in the world because he's going to be worth it. And unfortunately, especially people that have never been in software or hardware development don't believe that 1 brilliant guy is probably worth more than 50 rather average people. And that continues going. Job numbers on Friday morning, as someone in the den was reminding me. And I think, but I think more than anything right now, it is more about what is happening with the Fed. And the reason why is, see if I can dig this up also. There was another, hang on just a second if I can show it. That isn't it. Maybe I can find it here. That's the Eurozone. Oh, this is it. And this is the margin debt and S&P 500 real values adjusted to present-day dollars. Just how much margin is in the New York Stock Exchange and S&P markets. And what we find out is that we were back up at the levels before the 2000 debacle, and just slightly lower than the ones at the 2007 highs, and that's in the New York Stock Exchange. And, of course, the blue line, if you're watching on this, is the S&P 500, and the red line is the New York Stock Exchange. But we have crested. The margin debt is coming off. And, again, the biggest problem that we'll have in the marketplace is that these big fund managers that have been out going 10, 20, 30 to 1 on margin, and there are people out there like that, have to consider margin at risk. And that every point that the VIX goes up means that someone has to sell shares that they have to keep in their value at risk models. And right now, it's kind of the equivalent of what Tom talks about a lot in that the structure of the GLD. That is, someone sells GLD, they have to sell the physical gold. That physical gold sold that night. This is kind of the exact same thing. What value at risk every day tells them exactly how much risk they have. If it dips below a number, they've got to plant some shares out there and raise some cash. And that's why these vicious down cycles are going to probably even be worse since the 2008 blow-up, because now we've got the whole Dodd-Frank stuff hanging over our heads with these imposed risk reward models that can't be argued with, that can't be defended. It's kind of like the Terminator. You just you can't reason with him. You can't do anything. All you can do is kill him. The Terminator. It couldn't be argued with. You got to remember what that little statement was. I can't remember what it was right now. Anyway, make sure you keep an eye on this. The margin, when it comes down, is automatically going to force other people to go back and start selling also. And we need to get back to these levels that are probably mid 2010, probably 2009. Be back in a minute.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, taking care of a little housekeeping here. And I want to thank everybody that purchased The Art of Timing the Trade charts. We had a big promotion on it to get it kicked out the door. And I think it's off the website. If you call before the end of the day, I think that they can still work out a deal for you if you just forgot. But that is, I think phone calls today are the last line of sneaking and getting your camel nose under the tent. Anyway, just looking at some other things going on in the marketplace, a few stocks that are fairly interesting. Let me get all my stuff resituated here. Let's see here. Oh, I wanted to talk about something that we brought up yesterday. I had a phone call in, and the question was about, let me bring this up. The question was about IV in stocks, otherwise known as implied volatility. You can get this information free. It's on the CBOE website. And let me zoom in here so people can actually see it. If you're buying options, I think people that are well-versed in options already know this, but probably people less known is the historical volatility and the implied volatility. And if you go to the web, cboe.com, you'll be able to find these historical volatility and the implied volatility of your stock. And it goes 1 week, 1 month, 52-week high and low. And some of the other websites, like I talked about yesterday, like iVolatility, will do 30, 60, 90 days. But you can also, it's some interesting information, especially when you're looking against the correlation against the S&P index and some other things. But let's look at this. Let's go ahead and go to Apple, because that's what he was asking for. And what we find out is the implied volatility is just a little higher than what I like. But it is close on a $400 stock, probably not too bad. But normally what you want to do is when that number is less than 30, you probably can look at buying one side, puts or calls, and you at least have a fighting chance. Once they get over about 30, it becomes rather hard to make money. The options melt and the premium melts faster than the stock does generally, and you can find out. But a lot of times you'll find that implied volatility at 100% of some of these stocks. If we go back and look at Netflix, see if it has it here, NFLX, the implied volatility. If you want to look at the 52-week high, it was at 10-day average, went to 191% on 28th of January. This will give you a good idea just how wild the moves in the stock are if you have not watched the chart. But it'll give you actual number based on a statistical inference of what the implied volatility going forward is. So, of course, on this one, a month ago it was 40%. A week ago it was 69%. And currently today it's 75%. So we'll always look at these highs and lows and to get a good idea. Now, implied volatility will give you a lot of information out here, the delta call, and of course it's probably a little bit beyond the scope of this show. But one of the first questions you should be able to answer if you are buying puts or calls out here is what the implied volatility of the stock you are buying is. Is it below 30? Maybe it's worth buying a straight out put and call. If it's 100, you might be thinking about selling, especially because almost always you're going to have a probably 95% chance that the option premium is going to fade faster than the actual stock itself, although both of them can be quite violent. But very something to look out there and know about. Again, my kind of parameters is that less than 30, maybe I'll buy one side, the put or the call. If it's above that, probably better off looking somewhere else and or buying a spread and looking for that spread to go away. But you can get cheap insurance like your house. You don't care that you don't get a claim every year. But very low implied volatility in a stock, if you can see something setting up, almost a great way of making some money when that goes from low volatility to high volatility. When we come back, we're going to start looking at some more charts and wrap up the day here as kind of a quiet day setting up on the market.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Come back. We're off of 5 points on the S&P cash, 2.25 billion shares. So, kind of interesting. Looking at what's going on in the market, not a big deal. Gold fell $12 on the COMEX closing price to $12.43. September silver fell 24 cents to $19.33, and September copper fell 2 cents to $3.14. So we've had some small bounces off these lows, but I think just about everybody is expecting at least one more leg down or a test at these lower levels to go out and find what's going on. In the European markets, the FTSE was off just 0.1%. Germany's DAX was off almost 1%. CAC off 0.7. Spain off 0.3. Portugal off 1.5%. Italy off 0.6. Ireland off 0.1%. And Greece, which looks like it's going to be leaving the EU fairly soon, off 3.2%. Kind of interesting also, Croatia, I think it was either yesterday or today, is actually becoming a part of the EU and leaving kind of the war-torn years behind them. And they're going to have to make a lot of accommodations for what's going on. What do we have out here? GMCR. GMCR. What did we have in this one? Oh, it's off decently, not a lot of volume. This certainly looks like it wants to come back and come into this gap that it had on earnings back on the 9th of May. It popped up with 26 million shares coming back down in, but probably $68. And it was cautiously mentioned at some research firm and saying that K-Cup trends are headed down for the industry, but most of all for Green Mountain Coffee Roasters themselves. Zynga's up about 10%. ZNGA. If I can actually type. Zynga popped on news from of a new CEO. Pincus is leaving. The new CEO is pretty much the head of the Xbox division at Microsoft. I suspect that he was hanging around thinking that he might get Ballmer's job, but it looked probably when the stock started to bounce and some of the things started to turn around for Microsoft, probably not having anything to do with Ballmer, but of course Ballmer will get the credit. But I think he probably looked at it and said, hey, time is dwindling down. I don't have a real chance at the executive office at Microsoft because Ballmer is going to have his big rear end in that chair, and there's little to do unless we can get Bill Gates to fire him to ever get him out of the thing. And so he went Splitsville, but probably the most sought-after executive, at least in that space. He could have easily gone to run Electronic Arts or any of the other big companies in that entertainment space. Probably a fairly decent thing. The guy's pretty good. I'm figuring it's going to take him 6 months to turn Zynga around, but he certainly has all the right contacts to make this, and 95% of his reimbursement is going to be based on stock options. I think there's probably going to be a fairly decent play. It's just not going to be a quick one, so I'd probably may give it to Christmas. And hopefully this thing trades sideways long enough that it bores everybody out of it. And then we start seeing the major announcements from this guy and him starting to build this company back up. But at $3, the idea is probably to buy a very small amount of shares of Zynga and look at it as a never expanding or never expiring, hopefully, never expiring call on the entertainment space as they go after more and more mobile applications. Of course, this guy at Microsoft, not really into mobile, all about Xbox console games, but certainly knows a lot about putting all that stuff together. And probably the best guy that they could have ever gotten to run Zynga. The problem is just how much blood is being let every day for Zynga before it comes back out. But nice little pop out here today, but I suspect you're going to get a pullback on that. Yelp, the company that specializes in letting you air your grievances against local restaurants, because apparently when I've read it, that's all that it's about. That and plumbers. Yelp, YELP. This thing's just hanging out here at these highs. But a big push for this thing, basically going nowhere today. Did get as high as, 36, just a couple cents, it's 36.10 or so. So we'll look at that. Probably the most interesting out here are two stocks. One is BRY. and the other one is Align, which is Linco, and basically Berry Petroleum wants to get bought out. Of course, they got hammered today when the company that wants to buy them out, which is Linco, disclosed that the SEC has commenced a private non-public inquiry and was downgraded by a lot of folks. Of course, everybody that was trapped in this thing, actually not a bad-looking chart, took off. It's come back, but the whole idea that Berry Petroleum was coming back and being sold off over the last 2 weeks made me think someone knew something was going on. If they said that this thing was going to get bought out at $48, what's the deal? Why is it trading at 42 yesterday? And the answer is apparently everybody on the street knew that there was some kind of problem in these books at line. When we look at the chart online, of course, super hammered, and wasn't 5 minutes into trading today that the analysts were circling the wagon, telling everybody this will be over in 30 days. Just hang on, just hang on. And, of course, all they're doing is trying to keep the stock up so they can sell it off to somebody before this goes on. But most of the book analysts out there, people that are familiar with accounting, said that this could go on 6 months or a year, and that everybody was highly optimistic to think that there was any chance that we were going to see these things resolved in any kind of near future. But they do get resolved, but normally not extremely quick. Let's see, STZ actually. Constellation Brands missed quarterly earnings per share by 3 cents, 38 cents ex items to 41-cent estimate. Revenues rose 6% year over year to 673 million shares, which was about 1 million shares short of the estimate. And says that forecast is kind of in line. So probably not a big move on a miss out here. But when you look at the chart, this thing has not come back to even come close to where this breakout occurred, which is about $40. So you've got probably a good $10 move out here if the market continues to pull back. So pretty much of the stocks that are making news out here. So let's look at the ones that are just moving without news. Let's see what we have here. Yeah, Green Mountain Coffee Roasters off 6%. Garmin is off 3%. Let's take a quick look at that. GRM. And what do we have out here? GRM? Am I spelling right? No, GRMN, excuse me. Again, dyslexia cure for found. Probably not a big surprise out here. This thing gapped down wildly on the 20th of February. It's been trying to come back and fill that gap. The last major time was May 20th. Got up there with 1 million shares at $36.99. Tried to get up, kind of got into that candle 2 days ago on June 28th with 2.1 million shares, but still nothing compared to that 6.7 million share a day down in February. So running into resistance levels, it certainly did on that. And I didn't see anything in the news, but let's see if there is any headlines on this thing. Again, I'll check somewhere else. Garmin updates Astro GPS dog tracking system. Prep your portfolio. Oh, okay. Garmin downgraded. That's probably not worth it. Don't see a lot of news that would cause that. Other stocks moving out here today. Gold down 3%, not a surprise. We've been talking about Baidu looking like this thing was ripe to fall down the last few days. This thing is setting up its ABC down. I think we talked about this yesterday. And when we talk about expansions out here, the expansion's what, 103 to 88 out here. Ooh, is that right? Oh, that's the bigger one. Let's take a look at the smaller one here. A, B, C. And yeah, it comes right in at $80. I think we talked a little bit about this. Let's go to a 1 year here and look at this quick. What do we have? 103.80. We've got that little one out here, but certainly just a 1-to-1 off of yesterday. Not a lot of volume today, but I think we still have probably a good shot at hitting this $80 range back on Baidu. And if I remember right, there's a couple of little gaps, maybe even down to 78 on Baidu. But the China news continues to come out rather weak, and that's why we're seeing companies like Win acting just like Baidu on bad China news. Let's see. I don't know if we can call that an ABC. Yeah, let's take a look at it here. Hey, you could you might be able to talk about that as a small ABC. ABC. Yeah. So yeah, it pretty much. That small ABC basically went to a 618 retracement at $1.20.78. This was a buck higher than that on June 24th. So the question is whether or not we can start saying that high there on 619 is now the A point. We come in with the B and the C, and what do we have? 112.14. That would go right into this nice little gap out here. Let's take a little longer look at it here. What do we have? Where'd that gap come? Yeah, that would be about right. Let's go ahead and redo that just for a second. Expansion. Let's take a quick look. I'm going to call that A, B, and C. Ooh. And the euro broke some lows out here. That's interesting. Let's take a look at that. EUO, yeah. Well, my EUO trade's still going good. I want to thank Terry and the Den for bringing up that the euro broke some lows. Anyway, we were looking at this little ABC down just in Wynn Resorts, and I'm going to have to start writing some of these down on these smaller ones. BIDU and WYNN, and let's see. So we've got that set up, and what we were looking at is this nice little gap that came up on the second, and where most of these stocks look like they're coming right back to these levels. 112.14 would be just about perfect to come into that monstrous gap from the 31st to the 2nd of this year. But yeah, kind of a nice little thing. I mean, monstrous volume down. Basically a 47% retrace of that move, and now you have some nice gaps back down into this 1-to-1 area. So, well, yeah, what can you say? Looks rather interesting. Let's see if I can get anything on a 3-month. See, it'd be 140, 121.84. Yeah, that'd be it. Okay. So it did find it just on a smaller time frame. But yeah, you're right in there. You're right into the gap. So Wynn Resorts, another one out here facing issues. C-Trip, Microsoft's off 65 cents. Probably a little bit is that Xbox guy, which was probably the bright and shining star at Microsoft, mostly because Steve Ballmer had nothing to do with it. But not that much, off 1.7%. And we'll be back in just a minute to wrap this up. 1609 on the S&P cash. Not a big deal. I think we're probably going to lose a couple more points tomorrow and close under 1600.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And we do have Andy Heck warming up in the bullpen. So we're going to have a day of commodities. I guess he gets a day off since he won't be here on Thursday. And, of course, we're closed on Thursday. We will be back on Friday. We'll have a full day at TFNN, and we'll see how it's going out there. But, of course, always one of these quiet weeks, and the market does tend to pull back. We're at 1611 on the S&P cash, 2.44 billion shares. The volume has gone light, and I suspect we're going to see that lightness continue into the close and in tomorrow. My guess is that by noon tomorrow, there's probably not going to be more than a handful of people in the store, and it's going to be a very, very quiet. Probably the first hour of trading going to generate most everything, and then the wait into the jobs numbers on Friday morning, probably a little bit of movement in that, and then a very quiet day into the weekend. So probably have more interesting movements in commodities, which are always moving. It's always a good thing. So we'll talk to Andy Heck about maybe what happens on to commodities on these light weekends. Maybe he has a good idea for us to talk about in the next hour. Of course, we were talking with one of the gentlemen, the Den, and of course the euro broke some lows, and we're seeing some of these movements fairly interesting in these markets. Wanted to go back and look at the NASDAQ just to see if we had anything else really moving of interest. CRE's up at 3%. This thing, again, fairly short interest in CRE as this thing is going out and testing its previous high. Volume's not all that bad, but yeah, may make it by the end of the day. It was testing the June 19th high out here that had 2.8 million shares, 66.78. Oh, it's 3 cents short. So we'll have to look at that. Did not test it today, and the volume's going to probably come in line. So we'll have to see probably in the next couple of days how that works out. What else do we have going on? S-Bucks, S-B-U-X. Let's check this one out real quickly. Another one. Looks like the volume could come in, but again, did not break its high and rolled off of it a little bit. That's the June 19th high on Starbucks, SBUX, 67.48 on June 19th, 5.3 million shares. Looks like we're probably going to come in line with that today, maybe a little more. But what did it get within 28 cents of the high and rolled back down? This last leg, you probably say the energy's off a little. I don't see a lot of problems with this, but it is looking interesting. See what else we had. eBay, EBAY. Looking at this one. Now, another one up here. Looks like it's getting into its previous high and pulled back. And again, these volume numbers are not all that bad today, at least so far. What we were looking at. This one, probably lighter volume, 5.3 million shares, so probably a bigger issue. But we've got the June 10th high and eBay being a challenge today, 53.39, 11 million shares. You had pretty good volume yesterday, 9 million shares on the way up. Got very close to breaking that. Did break it today, though, on 5 million shares and pulled back into the trading range. So we're starting to see a few of these stocks that are going to look quite interesting. Let's see if there's anything else I wanted to look at yet today. Tesla was testing its previous high out here of 29 million shares, and going to be interesting. Look at that. It's going to be light. Close below 114.90 is going to be interesting on Tesla in the next couple of days if it doesn't get some juice. Anyway, we'll see you tomorrow. Same bat channel, same bat time.